Hey everybody, can you hear me loud and clear? I am Stefan Rust, founder of Truflation and CEO of Truflation.com, coming to you live out of a different area again, unexpectedly based on popular demand. You guys asked for me to come back these markets, and with the GDP announcement, I thought I had to come back and give you one last overview before we go into 2026. This will be the last. Maybe I'll do one on the second just before the new year. I don't know. I love what you guys are doing. I love to share what our team is working on so that you can get a feel of all the R&D that's taking place, but also get better insights into what we're working on. I'm super excited for 2026. We've really hit our mark. Our infrastructure is getting better and better and more stable. For Truflation.com and the Truth Network is supplying a lot of that. And we will be able to decentralize order books for the first time in crypto. All of these order books will be decentralized, coupled and targeting prediction markets. So really excited to bring you that and share more about that as we go forward. And it is going to really highlight the utility of the Truth token. But yeah, here today, I'm going to sort of cover off. I do this for about 20 minutes. Usually it ends up being 40 minutes because there's so much to cover off, but I'll try and stick within the 20-minute range. I'm going to give you some insights in terms of the GDP results that came through much higher than expected. So growth is flying, which ultimately a lot of it is all of this investment going into AI and really driving infrastructure, construction, data centers, grid, energy supply, etc. So a lot of that work is taking place and driving the growth. We're going to go into a bit of how that has impacted the market. We'll go into some of the content around inflation, deflation, what's going on, and some of the cool features that some of the developers are working on around Truflation, and some of the prediction market data that is available out there. And then let's look into 2026. What's going on? What can we see? What are some of the big institutions and the big investment houses in traditional finance? What are they talking about? Do we care about that or not? And I can see my glasses are constantly reflecting here, so I hope you don't mind not seeing my eyes. But I am here, and let's see if I change my glasses. Let's see if something does happen. Can you see a difference? Yeah, same SSDD. Sorry. So I'll just stick with these because these are cooler glasses, or at least feel cooler. You let me know. Do you like these ones better, or do you like these ones better? I don't know. You tell me. Which ones? Jega? 还是这个? G's here. 眼睛. No, 眼睛 are eyes. I don't know what glasses are anymore. Can't remember. I'm focused on macroeconomic data right now. So anyway, what happened, right? So let's go right into it. Yeah, 4.3% was the actual number. So I hope you can see. Am I sharing my screen, or did I not? No, I didn't share my screen. So let's go back, share screen. And here we go, right? So we posted, if you're following Truflation, you'll know about it, but we just shared investing.com's insights around the GDP. We do not yet track GDP. You've asked us for it. A lot of investors are asking for more GDP reporting, so we'll have a look at it. But we came in way above expectations, a whole percentage point. I mean, that's huge, right? In terms of market expecting 3.3, but it's actually 4.3. Great and huge achievement. And remember, Scott Bessent's goal was to have 3% growth, 3% inflation, and 3% of debt. So we're way above the 3% of in growth. We're way within the 3% inflation, and we're still outside the debt to GDP ratio. But that is a work still coming through. And remember, this team and this administration hasn't been in running the country for more than a year, right? It's less than a year. And so to try and get this huge container ship and move it into a direction, you can see the course corrections are happening much faster than I think a lot of people have anticipated. And any government out in the world, I've never seen such fast change in a Western economy, or any economy for that matter. But the markets didn't like this that much, right? I mean, we saw the markets reacted really positively at the beginning, and then whoa, big shock, right? So we saw a huge drop here. Uh, this is the S&P 500, right? Really huge drop, and then it picked it up again, and then they're beginning to realize, this is actually a good thing. This is actually a good thing, right? And so the market, this is the S&P 500, is beginning to realize that. How are the crypto markets reacting to this, right? So when you look at the crypto markets, we had a huge drop just the last 1 hour. Let's see. No, we're still okay. We're up a little bit, but we did have, I don't know why we're looking at that. Sorry, let's look at market cap. We can see still 87,000, nothing really. We had a bit of a drop from here down to here, but nothing really bad. So market cap overall today is really crap. Yeah, crypto is really weird. I just can't read this, and I've been through 4 or 5 cycles. You can be constantly day trading in and out, and that's, I guess, what you need to do. I'm a builder. We're building, and so we just have to keep head down and focused on what we can control, which is building, right? And so what you can see here, it still baffles me how Bitcoin is 1.7 trillion and everything else is like 300 million, and all the DeFi work, all of the tokenization of assets, even what BlackRock is doing, this RWA, they're moving this onto the Ethereum network. And so, how come that is not reflected in the volume, in the activity? And if you look at their volume, it's definitely in the magnitude, only 50% less. It seems to be a lot of undervalue here. Tether still growing. Look at Tether now, nearly, sort of coming around to nearly 200 billion in circulation, Tether alone. And that's not looking at USDC, which is still only 77 million. So, yeah, we're slowly creeping up. We're nowhere near the 2 trillion that we forecasted in 3 years. And in 2 trillion in 2 years, so 2026, 2027, we said end of 2027. But this hasn't taken into account all the private coins that have been created. We have a PayPal out there. Let's have a look at what they're saying around stable coins categories. Come on, baby, let's go to stable coins. Where are you? Stable coins. There you go, stable coins. And what do we have here on stable coins? 300, right? So remember, a while back, I think when I wrote my blog post, which was about 210, right? So we've already added $100 billion in stablecoins into the market. And I don't know if this includes all the JPM coins, the traditional, sort of, we were at a stable summit in Buenos Aires and in Cannes, where we were talking about the market, and there was SocGen there that is already tokenized and using dollars for all its settlements to the extent of hundreds, tens of billions of dollars as well. So all of these are not yet all included in here, but either way, we're seeing this grow to a 313 billion. So in less than 6 to 9 months, it's nearly 100 billion more. So the market is definitely growing. And, I think just coming back to the point, why did the market crumble, right? I think the beginning it fell, the stock slipped after strong GDP raises, fears over slow Fed rate cut, right? And so think about it. I mean, at the moment, all of Wall Street's first reaction, oh, no more Fed rate cut. Oh, duh. And then look over here, look how the markets and all of a sudden recovered, bounced all the way back. You can see this over here. And why is that, right? It's just ridiculous to actually be considering that problem. QE is already been announced. We've talked about $10 trillion in buybacks happening. The balance sheet of the Federal Reserve will increase. So interest rates is just one part of the algorithmic puzzle of money supply. So what does that mean? That means that the Federal Reserve, the central bank, will start buying from the US Treasury, which spends the money, will start buying T-bills and T-bonds, right? And when they buy those bonds, they're giving cash in return. So they're printing money, giving cash to Scott Bessent. So think of it, Jerome Powell is going to start buying, the loans for Scott Bessent, who will then start investing it in infrastructure. That's what's going to happen, to the tune of $10 trillion, right? So this is magnitudes of numbers that we don't know and have not heard of. And so that is really what's taking place right now. And that is the change that is really happening, which is pretty exciting to see. And it's coming, right? And so there was a really interesting video in terms of how these Federal Reserve works. So this is the process that works, right? So it's not the market that's buying it. Market will be buying it too, because there's no other attractive market currently than the US market. So all of the investors and the US dollar is sucking in worldwide money. So all of the small, medium countries are suffering significantly unless they are doing something that is so wow that's really grabbing the attention. Countries like Argentina, what Milei is doing with that country, it's encouraging investors. It's creating a whole new reference and a whole new architecture in terms of how to restructure a country. How to do that in 1 year's time, get reelected, get reaffirmed, strengthen your position, and continuously improve on the economic situation, bringing down inflation, significantly bringing up growth, enabling and accessing and unlocking market opportunities, and ultimately attracting investment, right? Attracting investment so that other investors can start doing that. Not only on the government side, so they managed to get some significant loans from the US government, but also from the IMF and other institutions, but also from private institutions that are going to start investing in there. And so those are things that are taking place. And that's what's happening. And we'll go into why we think a lot of the funds are going to be sucked into 3 or 4 markets around the world that are attractive. It's going to be into the Israel, the Middle East. That's where a lot of the money is going to go. Whether we like it or not, that's where the money is going to go. And a lot of money is going to go to China, right? China is going to suck up a lot of investment opportunity because of the scale of that market and the engineering talent that's constantly coming out of that market, and the engineering leapfrogging that they're doing. I think the West has no idea and still thinks China's just copying. They're going to copy. We're going to be the innovators. We're going to be the brains behind this. And we're misled by mainstream media that this is what they're doing. No. They're jumping ahead. Look at their research papers. Look at the reports that they're doing. Look at the innovation and the energy that they've already unlocked to be able to enable a lot of these new innovations in grand new areas, AI, robotics, and clean tech, right? Not only do they have nuclear power, they have a lot of clean tech too. Solar panels. It looks disgusting, but at least they've got a lot of energy supply, way more than anybody else in the world. And I'm sure you've seen the graphs out there. There was one that was just posted, which was really interesting. So a lot of that is happening. And they're going to be leapfrogging. But one of the things that I thought was really interesting, there's this really good show or on YouTube. I'm going to share this. So this is a really good platform for learning about interest rates and how they work and how bad actually these Federal Reserves are. And as they're off balance sheet, these are entities that can lose money and have no accountability for losing taxpayers' money, right? Or printer money, because it's ultimately taxpayers' money. Why? Because in the end, the taxpayer pays in the form of debasement, in the form of inflation coming into the market, right? Because the central bank is buying government bonds and loan receipts to be able to lend the government money so that they can spend the money. And the central bank is buying this at a profit or a loss, right? And here, this is a really good report. It's a bit long, but let me just quickly play some of this and speed through it. But this is, I thought, really good. And
same with all these central banks. That's the famous thing that they change in order to try and influence what's going on with the economy. This is what happened in recent years to Bank of England interest rates. rates. Look, they were rock bottom through the financial crisis, went down.
Here he highlights the interest rates, right? So it was ZERP. Remember the ZERP days, nearly zero. It dropped to zero, and then boom, it's jumped up. Look at how quick it jumped up. Within literally 1 year, it jumped up all the way to over 5%. That's a huge shock to the economy, right? Bang, rattle, rock and roll, which really shattered the whole market. And it's slowly dripping down, but they're holding steady.
And a little bit further, actually, in COVID and after the Brexit referendum. And then they went impact on Rachel, which the bank.
So during this whole period, they were quantitative easing, right? So they were buying government treasury bills at zero interest rates. So it didn't cost much money, to the extent of $1 trillion nearly, right? So £1 trillion, sorry, not dollars, pounds.
Bank of England did, and other central banks around the world during the financial crisis. Basically, because interest rates were rock bottom, that was down near zero, they decided there must be. And here is why this matters. I'm going to give you a little example of one of the bonds that they bought within this program and what happened to it, okay? It's a 2061 bond, okay? Just
So this is a bond they issued, and it's valid till 2061. So they repay you back in 2061 at 100 par, right? So 100. So for every $100 pounds you put in there, you get 100 back in 2061. And so, yeah.
And thousands of things with this printed money. This is one of them. And the bank bought it at £101. And look at what happened to the price afterwards. And look at
so they buy this amount at £101, right? So they're buying £100 worth for £101. So they're paying an extra pound on it.
Where they sold it. So that's where they sold it at £28. And it does.
And this is because this is tied to interest rates, right? So look back here. When we look at when the bond was issued, it was back in 2020, right? And so the interest rates at the time were 0%. And so when interest rate is zero, you pay a premium in order to attract investors to be able to lure them to buy it. It's only worthwhile buying if I actually can get a reward associated with that. So in this case, it had a better yield, so there was better demand for it, and people wanted to buy it, and so they paid 101 for it. And so maybe they were competing against the market or whatever it was, and then they sold it at 28. So you can see, anyway, watch this whole video, but look at the efficiency at how these Federal Reserve banks, these central bankers, you think they're all smart, they're all economics, and they're brilliant, they're super smart, they always make money, No. The central bankers are economists that don't make money, they lose money, and they are bureaucrats, right? And so you can see here, out of, they sell it at £28. Oh my God, a 73% loss. So I don't know, that doesn't seem like very smart maths to me. But either way, watch the video. It's really explanatory in terms of what and how this works. And anyway, they've got a lot of good shows and got good metrics, good education on the UK metrics. So check that out. But yeah, I wanted to share with you something more interesting in terms of what we're working on also at Truflation, and not only us, but our developers, right? So that is sort of the whole economy section around interest rates, around the fear, how the market initial reaction was shock because we're doing so well, and then realizing that actually the market's actually going to be doing pretty good. If this growth continues, we're on track to build a stronger and bigger GDP portfolio, which will then have an impact on debt. And then all the other elements that are going and being attributed towards writing down the debt, even though a $10 billion, $100 billion won't be going to driving down the debt, even though the gold card is going to help drive that. It may serve as interest is about $1 trillion. They still need to bring down the interest rates, and they will come down. We will see how that goes. But I think I wanted to share with you something more positive, which is really prediction markets, hot rave, hot trend, for 2020. 2026. Everybody's talking about it. We've seen them already grow significantly in this year. And we have just also seen a huge report. I don't know if you've seen it. I'm looking for the report that was put out by A16Z on the markets and the size of the market. So how big are the markets? What's the market doing, etc. So anyway, check it out. I think it's the big things in crypto, or this A16Z crypto report. I can't find it right now, but I'll find it and then I'll share it with you as well. Maybe we'll talk about that next time. But it was a really good report highlighting insights in terms of where the market's going. Prediction market is one of those categories. We've been talking about it. You know that we're working on it. But more importantly, I wanted to share with you just some of the insights that some of the developers around the Truth network are leveraging our data to then, and the MCP server that we have, and combining that with prediction markets. So here you can see they did a bubble chart. So truflation.predictionbubbles.com. You can then see here AI bubbles. You can then actually search your criteria. You can put in there, I put in macro. We captured both markets, so APIs from Polymarket and Kalshi. And then you can see here, how high will unemployment get before, here, let me just go and increase this size. Sorry guys, I'm on my laptop, so you guys are gonna have to bear with me. I'm not in my usual studio. And I hate this laptop. Anyway, here you can see, so what happens, right? How high will unemployment get before 2030? And so you can see it's a long way away. It's just one of the markets. And you can select the criteria. I think it's still a product in development, but there are 71 markets that are relevant to macro. And then you can go over and hover, and you get an AI analysis here from Truflation using the MCP and some prompts that they put in there. And then you can see the probability, right? Will the 10-year Treasury hit 4.6 in 2025? Yes, no. Most of the people are voting no to a 99.3%. And yeah, that's one prediction market inside the prediction protocol called Polymarket or Kalshi. So that's how we define it, right? You have prediction protocols or applications. Those are Kalshi and Polymarket, and they have thousands of prediction markets. So here we have 71 unique markets. Each of those markets have an order book. So each of these markets to create cost the development of a smart contract. You need to deploy that smart contract. That costs gas fees to deploy the smart contract. To update the smart contract with daily volume, that costs gas fees. The order book is 9 times out of 10 not on chain. So you don't see the full open interest, but they do report the open interest on the chain at some point on a consistent basis, so everybody can see the open. But those again cost gas fees every time you need to report it. And then they need to do settlement. In order to do the settlement, they work with an oracle to do the attestation. Then they need to work with a resolver who is doing and providing resolution associated with that attestation or the settlement. And so those then cost additional gas fees for the oracle or the source, gas fees for the settlement and the resolver and the resolution. So a lot of costs across thousands of markets. So in this case, just 71 markets with a limited time frame. And so now what you're going to see on the Truth Network, the beauty about the Truth Network is no gas fees whatsoever for any of those actions. You just pay upon settlement. You pay a 2% fee for settlement. Boom. That's it. And the settlement is, by the way, all on chain already because all the sources have contributed their data sets to the Truth Network. So you're leveraging the Truth Network to support the settlement. So there are no fees for that. And the data is already there. And we will have more and more data already. So we're already adding lots as we go along. So pretty exciting to see. And then that is a unique proposition. And there, those 2%. Across, imagine that's every day 71 markets settle. Let's say they settle on a daily basis. What's the average open interest on each of those markets that go to settlement. And then there's a 2% that gets shared across all the constituents and happens automatically based on the Truth Network consensus algorithm. So all the participants get their funds as the settlement gets settled and paid, and the traders get their money through the application that they work with, the market makers and the liquidity providers all get their rewards, the data provider get their rewards, and the validators get their rewards. So we're going to be sharing a lot more around that and Truth Network, and really Alex and 0x Tech that have been building this amazing outfit, really good and strong in the validator node operations, DevOps, and a really good team that are just tinkering away and showing what can be done with the data. Yeah, and so the other element that we have been working on is a lot of you have been asking us around providing more transparency. And so we have been sharing and doing a lot around identifying why and how we're 45 days ahead of everybody else. So a lot of you have asked that. We will be going through this report. You can see the methodology, and we've studied in depth 3 different segments from January to 21 at the rise of high volatility and inflation, 21 to July, so when it was a bit flat, and then after 23 when it was flat, but then here 21 to 23, the big jump and the big drop. And so there we had 75-day lead versus the 41, but over the whole period of time, we're 40 to 45 days. So this is a long report. We've got a GitHub repo, so you can look at this. This is going to go live on our website, so anybody can go and play and simulate. If you're a financial analyst, it's in Python, so you can actually go and test and validate. And we've also, of course, in true Truflation style, we've managed to share our methodology, so you get to see that as well. Device is struggling to record. I'm sorry, I don't have bandwidth, or I'm on too much thing. Anyway, I'm going to cut it short there. It's more than 20 minutes. I have a hard stop, and I've got an important call to take right now in 1 minute. So I hope you enjoyed that. I'll be back Tuesday in a week. I won't do Thursday.